Hello everyone and welcome back to the sessions on corporate financial reporting. Friends, when we talk about recent developments in financial reporting, a very important and emerging concept with the title 4P bottom line reporting or quadruple bottom line reporting QBLR comes into the scenario. Now what is QBLR? What is quadruple bottom line reporting or what is 4P bottom line reporting? First of all, it is an extension to an existing concept of reporting which was titled as triple bottom line reporting. So triple became quadruple. So what was triple bottom line reporting? If you try understanding that, a little extension to that would be 4P bottom line reporting, and that extended version can be easily understood, but the fundamental focus has to be given on the existing concept of triple bottom line reporting. Now when we talk about triple bottom line reporting, there are two technical terms over there, the term triple and the term bottom line. Let us understand each of these terms. The term triple I'll be explaining little later, but let us first focus on bottom line. When we say that a corporate entity has to report its bottom line, we are expecting the report of profitability. How much profit the entity has earned for its shareholders is the information that we want to have. In simple words, the shareholders who are the owners of the company, they would want a report on how much they have earned during the given period or during a financial year, and that is basically reported through the bottom line. Bottom line means it's like profit. Entire profitability statement will be there, but your fundamental focus is on the bottom line, that is the profitability. So that profitability report or reporting how much profit a corporate entity has earned is what we call as bottom line reporting. So you understood what is bottom line reporting. Now what is triple bottom line reporting? So triple or triple P bottom line reporting, there are three P's involved over there. Profit is there, but along with profit, two more P's get involved, that is people and planet. So it is not just about how much profit you are earning, what you are doing to the people in general, that is to what extent you are socially responsible, how do you fulfill your social responsibility, and how much environmental friendly you are, what you are contributing to the planet. When you start reporting from all the three dimensions, what you are contributing to your shareholders in terms of profitability, what you are contributing to the society in terms of your contribution to the people in general, and what is your contribution to the planet, that is three P's getting involved: profit, people and planet. So traditionally the concept was a single P bottom line, that is profitability report. Then came a change in that, and that innovative change was triple bottom line reporting, that an entity should not only report to its shareholders how much profit we have earned, it should also report what good it is doing to the people in general and what good it is doing towards the planet. If you see nowadays, big entities in their advertisement also, they have started showing that we are making eco-friendly products, we are environmental friendly, we have done this, we have done that. Major focus on environment, major focus on pollution control, major focus on people welfare. Why is this coming into the scenario? The objective is, see, we all are human beings. We want to earn money for our survival, but not at stake of causing harm to someone else, correct? That is how fundamentally we believe ourselves as human beings. Now, when individual can think like that, why not an entity should start following the same line of philosophy. And there came the concept of triple bottom line reporting. So what I'm going to do over here, friends, I'm going to first explain you what is triple bottom line reporting, what is the significance of triple bottom line reporting, how this concept has evolved, and gradually at the later stage I will switch to the extended version of triple P bottom line reporting or triple bottom line reporting into quadruple bottom line reporting, that is QBLR. So let us focus on one thing at a time, and let us first talk about one basic understanding that 4P bottom line reporting or quadruple bottom line reporting itself is an extension of triple bottom line reporting. Let us attempt to break down these terms and try understanding the whole concept. The concept of triple bottom line incorporates two technical terminologies, that is triple and bottom line. We first understand these two for better understanding of the concept of triple bottom line reporting. So what is bottom line? In common parlance, the bottom line refers to operating result, which is usually recorded at the very last line or bottom of the income statement. Over the last few decades, environmentalists and advocates of social justice have been challenged to introduce a broader concept of bottom line to public consciousness. The triple bottom line is a business concept which states that firms should commit to measuring their social and environmental impact in addition to their financial performance, rather than solely focusing on generating profit or the standard bottom line. It can be broken down into 3 P's, what we call as profit, people, and the planet. So earning profits continues to be one of our primary goals, but merely earning profits and measuring profits should not be the sole objective. Earning profits has to be along with measuring social and environmental impact. So if the impact is toxic or dangerous or pollution creating, just say no to these. So the 3 P's that we are talking about, it is standing for profit, people, and planet. So the idea is not to individually achieve these as goals, but to simultaneously achieve all the 3, and the bottom line reporting should include report of all the 3 factors taken together. Now let us go a little deeper into the concept of these 3 P's. Profit, people, and planet. If I am carrying out a business activity, I first have to understand what do I get out of this. So obviously my fundamental objective is to earn profit from this business, and there is no harm in earning profit. Understand one thing, we are not discouraging an entity to earn profit. Definitely profit earning is the fundamental objective of any business. However, are you earning profit by causing harm to other people and the environment around you? If you are doing that, it is not good, and therefore you need to look into that. Apart from earning profit, what is your contribution towards people and planet? That is where we are talking about these 3 aspects: profit, people, and planet. We are not emphasizing on letting go of this profit element. We definitely want to earn profit, but a little sacrifice in profit, if it can bring lot of benefits to people and planet, why not to do that? It's okay to earn a little less profit instead of being little cruel towards people and environment. And that is where we are talking about this triple bottom line reporting. So let us try to summarize what we just discussed. The first bottom line, the bottom line of income statement, which is the traditional measure of operating result. Second bottom line, it is organization's people account, that is a measure of how socially responsible an organization has been throughout its operations. The third bottom line, it is organization's planet account which measures how environmentally responsible the company has been. Let us go further and discuss each of these in little more details. We are first talking about the first P, that is profit. And here what exactly is required is the objective of achieving shareholder value analysis. When we say shareholder value analysis, you should understand the perspective of a shareholder. Shareholder is typically an investor. What value has been invested and what is the increase in the value on a constant basis, the shareholder or the investor would want to know. So it is company's responsibility to provide the profitability report in such a manner that shareholder can evaluate the analysis with respect to share value, and that is what we call as shareholder value analysis. Next is the shareholder should be able to arrive at a proper information about the growth and returns and of course the changes in the share price. So some information can be given in the financial statements, some information can be obtained from the market. Now obviously to enhance the profitability, one has to aim at cost reduction. So cost reduction cannot be ignored, cost reduction has to be emphasized. So what is the company exactly doing for achieving its cost reduction target has to be reported to the shareholders. And most important thing, profit cannot be earned without taking risk. So we definitely understand that risk taking is important, but how much controlled risk exactly we are taking, that we have to look into. So controlled and calculated risk that the company is taking has to be informed to the shareholders. Now this is all about the first P, that is profit. Moving forward, we are now talking about the next P, that stands for people. Now traditionally when we talk about people, it included only shareholders, but now in the modern terms we are talking about the stakeholders in general. So earlier the focus was only on the interest of shareholders, but now we are talking about stakeholders. Now who are stakeholders? Stakeholders definitely include one segment as shareholders. We are looking into the interest of shareholders definitely, and we are also including other segments of people who can be now included under the stakeholders category, and that will include customers. So customers' interest should be taken care of, employees' interest should be taken care of, and communities, that is people in the community in general who could be part of your support system, even interest of these people should be taken care of. Let us try to conclude what we have just discussed over here about people. So under traditional reporting and triple bottom line reporting, basically the meaning of the term people itself got evolved, correct? Under traditional category, for a corporate entity, the people, it was resembling the shareholders only. So now with this evolution, what we are now focusing, that people are not just shareholders, people are all the stakeholders. And when we talk about all the stakeholders, your shareholders are definitely part of that, your employees, your customers and community in general, all are people around you, and your responsibility is not just towards one segment of people, your responsibility of reporting is towards all these segments, and you need to look into what is your contribution to each of these segment of people. That is where the focus comes on people. The next point is about planet. Now as a matter of fact, you can see 100 fossil fuel producers have been responsible for 71% of global industry's greenhouse gases since 1988. So basically what we are talking about is the increase in the level of pollution, and this hasn't just initiated now. Right from the point of industrial revolution, you know one thing, that the industries have been causing pollution, and the level of pollution, if you could see what was there and what is now, there is a significant increase in the level of pollution. Now this definitely is what we are talking about as a matter of fact. The question is, what are we doing to prevent this? Now see, certain level of pollution will occur, you cannot avoid it, but how much should be the level of pollution? We have to keep the pollution level within the tolerable limits, and that is where lots of means have been adopted by various industries, various companies to take care of the level of pollution. Now we have in financial reporting the carbon credit system, correct? As in, what is the level of emission that you are producing and what carbon levels you are releasing in the atmosphere, you have to keep a check on that. So you have to keep it under the tolerable limits. That is what the norm is. And how far an entity is able to keep that pollution within control, that is to be included in its reporting. Let us take up some remarkable examples in real life. Now, as you know, Mumbai airport uses green bacteria for cleaning, which ends up saving 1 lakh liters of water every day. That's amazing, right? Let us take some more examples. Companies are using solar power panels so that the pollution can be kept under high degree of control. Water treatment plants could be yet another example of how environmental friendly a company can be. Likewise, use of wind turbines could be another such example, and one new scientific evolution that we are coming across is the recycling from waste to energy. So finally, what we are looking at is the inclusion of all the 3 P's in conjunction to one another, that is profit, people and planet. Let us discuss a little more about these 3 factors, which are 3 different P's in triple bottom line reporting: profit, people and planet. Now I have already discussed with you what is the significance of profit, what is the significance of people and planet. But now in this diagram, can you notice that there is a common intersection area between profit and people, that is basically termed as equitable. Now what is the significance of this term equitable? When you are talking about profit and people and you find a common area between profit and people where you are earning profit, but parallelly you are towards people as well. So once again, let me tell you, earning profitability need not be compromised, but when you are taking care of people, definitely you are shedding away a portion of your profit for their benefit. But whose benefit? These people who are connected to you, which we generally call as our stakeholders, are group of people who are your shareholders, who are your customers, who are your employees, other members of community who are providing you a support, or you can say they are part of your support system. In this scenario, if you have to let go of little bit of your profitability by reducing the share that could go to your shareholders and instead making an equitable distribution to all the people connected to you, it actually makes sense, and that is why the intersection area between people and profit is what we call as equitable. Next, let us focus on the common area between profit and planet. When you are taking care of planet, you definitely have to compromise little bit of your profitability. This common area is called viable. That an entity needs to be viable. When we say present a viability report, that report should include the factor of contribution towards planet. Why? Suppose an entity is coming up with a new project and the entity has to identify whether this new project or its production process or the final output that will be produced by the entity, is it going to be toxic? Is it going to be dangerous? Is it going to be pollution creating? If yes, then what control measures will be adopted? Are you going to fit smoke filters in the chimneys in your factory? Are you going to have a proper step-by-step procedure of making sure that you are not creating pollution beyond a tolerable limit? And if that can be taken care, of course you'll have to incur additional cost towards it. So how much viable it would be to take care of planet parallelly along with earning profit. So that common area is basically viable. The third common area between people and planet is what we call as bearable. See what happens ultimately if you are talking about taking care of people and planet, you are going to compromise little bit of your profitability to both of these factors. And when you do that, you cannot do such contribution to such an extent that it wipes off your complete profitability. You cannot erode your entire profit in taking care of people and planet, because one segment of people who are connected to you are your shareholders, right? You cannot ignore them as well, and to them the only thing that you have to provide is profit. So how much compromise you can make to your profitability for the purpose of taking care of people and planet? So basically you have to bear the burden of people and planet, and that is why the common area between people and planet is what we term as bearable. Now, most important thing over here is the center of the diagram, which is a common area among all the three factors, and that is what we call as sustainable. So the entity which is able to achieve all the three P's, it is basically able to sustain. The long-term sustainability would come only when all the three factors are considered. So let me show this picture to you clearly. So this was the whole discussion about triple bottom line reporting, and as we have discussed earlier that an extension to the triple bottom line reporting, what we will be encountering now is 4P bottom line reporting or quadruple bottom line reporting. So coming to the fact of what is this 4P bottom line reporting, apart from profit, people and planet, a fourth P is coming into picture. That fourth P stands for purpose. But before I jump to the fourth P, let me remind you what were the three P's. The first P, profit, is the business's objective of knowing that what do I get from this business. So it is purely about what I get back from this business. The other two P's, that is people and planet, here we are looking into, am I doing business without causing any harm to people and the environment? And then for quadruple bottom line reporting, what comes into picture is the fourth P, the introduction of fourth P as purpose. The question is, why I am doing this? Now this may sound a little superficial to you, but this is something really important. Let me take you back to when you have learnt in school days, maybe in economics subject, something like Maslow's hierarchy of needs. If you can remember that pyramid, which starts from physiological needs, then the next step to fulfill your needs would be safety kind of needs, safety and survival needs. Then it is love and belongingness. Then it is esteem related needs, and at the end, on the top of the pyramid, it is self-actualization. So basically, human beings, the way they behave, you are first struggling in life to survive, right? Your physiological needs, like basic needs, food, clothing, shelter, if this is given to you, you are at least taking care of your survival. Thereafter, the other needs come up, and on top of the pyramid, it is self-actualization. When I say self-actualization, there comes a state where people start getting connected to the spiritual world, and that is where we identify that whatever we are doing, why we are doing this, what exactly is the purpose of life. So when human beings are eventually going to reach that particular stage somewhere in their life ahead, don't you agree that even business will have similar kind of hierarchy of needs, because a business also would be connected with people, and therefore if human beings have objective of reaching a spiritual stage in their life, how is this particular business aiding these human beings to reach their spiritual goal is the objective of this fourth P. So this fourth P, which is basically standing for purpose, it is talking about the purpose of life, purpose of whatever you are doing, and it is basically connecting the business with the spiritual world. So let me take you ahead on this and mention one thing clearly, that the 4 P's that we are now talking about are profit, people, planet and purpose. So these are the 4 P's that we are aiming at. Moving forward, concept of 4P bottom line reporting. Quadruple bottom line reporting, that is QBLR, expands the traditional reporting framework to take into account social and environmental and spiritual performance in addition to financial performance. The concept of 4P bottom line reporting states that reporting should incorporate the financial, environmental, social and spiritual performance of an organization. QBL reporting refers to the publication of economic, environmental and social and spiritual information in an integrated manner that reflects activities and outcomes across these 4 dimensions of a company's performance.